Hello and good day. This is the daily analysis of the silver symbol for February 23rd. Price. According to our previous analysis, there was a bullish bias, and on the last trading day, we saw a candlestick.
Do you know why your profits are smaller than your losses? Because you don't analyze your trades, you just execute them. Download the Trading Journal app for MetaTrader 4 and 5 for free now.
A full-bodied candlestick, which indicates a bullish outlook for the current week. With the start of Monday and the opening of the Asian sessions, there was an aggressive upward move. The price moved towards the buy positions, but ultimately faced selling pressure. If during the rest of the day, the price is accompanied by a strong momentum candlestick and closes above its previous swing at the 86.30 level, this could indicate a bullish outlook and the end of the downward trend in the market. However, if a weak candlestick is recorded or even closes below the swing low and closes within a range, it could lead to a short-term downward correction in the coming days, down to the 79.78 level. After that, it could enter a bullish phase. We can also consider, as an additional confirmation, the correlation between silver and gold. If silver closes above the swings and gold closes below the range area, this could indicate a divergence and the price may move downward. Alternatively, if gold also manages to close higher, if it closes above its previous swing, and silver also closes above its own previous swing, this is a strong confirmation for the continuation of the bullish trend in the market based on the 4-hour time frame analysis of silver. We can see the price movement, which, after breaking through its previous resistance and moving within a descending channel, generated a trading signal. After a pullback, we could have entered a buy position. It reached its target at the edge of the distribution line in the fair value gap area, after which we see the price moving sharply upward. It collected liquidity from the buy side and ultimately closed above the order block area, which can only result in a short-term bearish correction. And after that, it is expected to enter a bullish phase and move into the next area of interest. By examining the multi-RSI indicator from TradingFinder, we can see the price movement entering a high potential area, where both the RSI with a period of 7 and the RSI with a period of 14 are involved. In that high potential area, they have established themselves, which indicates the continuation of the bullish trend in the market. If there is a decrease in liquidity in the market, it can only result in a short-term downward correction. If it enters the rejection block area at the 8.147 level, and in the case of 6.137 in a downward trend and breaking 133.3, we can have a market structure shift. We can use this opportunity to enter a buy position, and if it enters the FWG area at the 83.73 level, we can also use this opportunity to enter a trade. The overall recommendation for executing trades is only for buy positions, and it is advised to avoid taking trades against the bullish market trend and not to enter sell positions, as the price could even move higher. Enter the order block area, and in case of a pullback in the trend. The bullish trend may have a short-term correction and then target higher levels. With the analysis of the 1-hour time frame for the silver symbol, and by examining the multi-RSI indicator, a negative divergence has been identified, where the price has formed a higher high and, in the multi-RSI, a lower high has been formed, which indicates a weakening of the bullish trend, and here the price had a short-term correction to the downside. If the multi-RSI fails to pull back and enter the overbought zone and instead moves below this zone into a neutral phase, it can serve as a confirmation for the continuation of the downward price movement and targeting lower levels. And if it reaches the zone, a doji candle at the 18.1 level, by identifying weakness in the downward trend and the formation of a lower swing, the trader can use this as a strong confirmation for entering a trade. Also, by examining the current fundamental factors, the overall market sentiment is bullish, which, when considering geopolitical risks and the issue of uncertainty regarding tariffs and Mr. Trump's reactions, is also reflected in the market. Gold is also reflecting this. They can record higher prices and continue their own trends successfully and with persistence.